What's up, traders, and welcome to Trading Life. Today, we're going to be talking about EPS, which is an acronym for earnings per share. If you're watching this video, it's because you probably heard EPS or saw an EPS on a financial statement or an earnings report and don't understand the concept behind what EPS means. In this video, what we're going to try to do is try to simplify the EPS and give you a couple examples to give you a better understanding of how to use this in your trading decisions. So let's dive in, but before I do, unfortunately, I'm going to have to give you guys a quick legal disclaimer. All trading involves risk. One must be aware of the risks and be willing to accept them in order to invest in the stock market or in options markets. All information provided in this video are for educational purposes only, and no warranties are given or implied. Information contained in this video should not be considered as financial advice to buy or sell stocks or options. All examples are for illustration purposes. Please consult your broker and do your own research prior to any trading decisions. Now we got that out of the way, let's jump right into understanding what EPS is. But what is EPS? EPS is an acronym for earnings per share. It is the driving force of the stock. This is the most watched performance gauge for the company. It shows how much profit a company has generated, whether it is in the quarterly or yearly basis. Usually the EPS is given in two time frames, which is going to be quarterly, which is every 3 months or 4 times a year, or once a year in a yearly basis. It's very important that you watch both time frames. The reason why is very simple. Let's say in 2019 you got an EPS at the end of the year of 5, but the first quarter of 2020 the EPS drops to 4.5, and then in the second quarter it goes down to 4, and then the third quarter goes down to 3. So that kind of gives you an indication that the company is not doing so well, and you don't want to wait until the new EPS value comes out at the end of 2020. And you should be making your decisions on a quarterly basis to make sure that your investments are still making sense. So how do we calculate EPS? A portion of the company's profit is allocated to every outstanding share of common stock. Before calculating, you must take the difference, which is subtraction, between a company's net income and subtract the dividends paid for that preferred stock. So remember, every company is not built the same. There's going to be small companies and big companies out there. Some of the bigger companies pay out dividends to their investors, which basically will affect the net income in the EPS formula. All right, so EPS formula is net income of the company divided by the number of shares outstanding. All this information you could probably find in a financial report on any of the financial websites, which is either Yahoo Finance, Market Watch, Bloomberg.com, any of those places that you would like to see your stock ticker symbols and charts and stuff like that should have this information available. All right, so how do we calculate EPS? I'm going to give you an example of a company. This is a made-up company, so don't be going out there trying to search up company ABC, which is a ticker symbol, but it's not a real ticker symbol. It might be real, but in this case we're using it as an imaginary company. So let's say the net income of that company ABC is going to be $50 million. The dividends they pay out is going to be $5 million, and the shares outstanding is 20 million shares. So now that you have these three values, you're going to have to apply it to be able to find the net income of the company, which is going to be $50 million minus $5 million of dividends paid out, which gives you a net income of the company of $45 million. Okay, so now that we got that number of $45 million, we could apply it to the EPS formula, which is the net income of the company, which is $45 million. Divide that by the number of shares of outstanding shares, which is 20 million shares. So that gives you $45 million divided by 20 million shares, which equals a value of $2.25 per share. Thus, company ABC came to a EPS value of $2.25 per share. So remember, guys, this is going to be called a basic EPS. This is for like probably a smaller company, because $50 million of income is not really profit. Net income is not a big company, especially on the S&P or anything like that. So this is probably for a smaller company. So we're going to talk about now what they call is a diluted EPS. So this is basic. This is very basic. Now we're going to jump over to a diluted EPS. So what is a diluted EPS? In the previous example, we explained that calculated the basic EPS, but only account for the common shares outstanding. In a diluted EPS, which is earnings per share, a company may have convertible preferred shares or stock options, which can become common stock. In theory, if this happens, it will increase the amount of common stock and dilute the earnings per share. Okay, so a lot of the larger companies have convertible preferred shares or stock options. I'm pretty sure for you guys that do options trading, understand that not all companies have the options for trading stock options, but a lot of them do, which is usually the bigger companies. So those stock options can become common stock. So that has to be calculated into the EPS formula to be able to give you a better understanding. But also understand that when you dilute something, you're watering it down. So basically, you're just bringing down the value of the of the of the EPS. All right. So the diluted EPS will always be lower than the basic EPS. So let's do a quick calculations of how to calculate a diluted EPS. All right. So going back to the company ABC, we have the net income of $50 million and the dividends paid out of $5 million. So we have the net income of the company at $45 million. If you guys are a little confused, make sure you go back a couple minutes and see how we calculated that $45 million net income of the company. So we currently have the shares outstanding at 20 million shares, but company ABC has convertible preferred shares that can become common shares of 4 million shares. So to be able to get a better number of the diluted EPS, we have to find out what the number of common share total is. So we have the 20 million shares of outstanding shares, which is the 20 million from the original. But since we have convertible preferred shares, whether it's preferred shares or stock options, there's an additional 4 million shares, which needs to be added into it. And that'll give you a total of 24 million shares. Okay, so we come out with the EPS formula, which is net income of the company divided by the number of shares outstanding. But this time around, the net income stays the same, but the 24 million shares is different than the 20 million original shares because this company has options or convertible preferred shares. So we have to take that into account and add that, divide that by the net income, which gives us a value of $1.87 per share. So in this case, the new diluted EPS is going to be $1.87 per share, and since it's diluted, it's going to be watered down, and it's always going to be diluted EPS is always going to be less than the basic EPS. Okay, so in the previous example, the basic EPS was $2.25. Now the diluted EPS is $1.87. So now that you have all this information, how do we use this? How is it used to make a trading decision? So earnings can cause a stock price to rise or drop. Many investors keep an eye on the EPS to make an educated guess of the direction of the stock. The higher the EPS value, the more money the company has made and has an opportunity to reinvest that into the business or distribute that to the stockholders in the form of dividend payments. So in other words, the higher the value of an EPS, in theory, the price should go up. Again, it's not 100% guaranteed that it will, but it's a theory. Okay, so can you have negative EPS? Yes, you can. So if you have a negative EPS, it's a strong indication that the company is not doing so well, which can push the price to go lower. Okay, so this is not the only indicator to determine direction of a stock, but it is a tool to help you make an informed decision when investing. So my recommendation to you is to use EPS as a tool in your toolbox, because let's say you're trying to build a house. You're not just going to use a hammer to build a house. You need other tools to help you make that house faster and better. So think about understanding EPS as a tool in your toolbox, and you got to combine that with other tools that you have in your toolbox to be able to make an informed decision. Okay, so if you guys have any questions, make sure you put them in the comment section. If you guys enjoy the content in this video, this is my first video, so please don't butcher me in the comment section or anything like that. But if you do enjoy the content in this video, we'll be dropping more videos kind of similar to this to help you guys, the traders, make informed decisions when it comes to stock trading. So thank you very much, and good luck to everyone, and I will see you guys on the next one.